Hi everyone, this is Leo Albanes with my January 2017 Housing Market Report. But before I begin, I want to wish everyone a Happy New Year. As a proclaimed real estate expert, and as New Year's resolutions happen, I have decided this year to educate and inform my clients, my subscribers, and my future followers. If you're thinking about buying or selling real estate, regardless of where you live, please give me the next few minutes and allow me to update you on the latest U.S. real estate market news. I ask that you subscribe to my channel, check it out, and make any comments or requests. You never know, I might include them in my next broadcast as I continue to deliver you the latest real estate market news, special reports, and real estate information. I'm going to cover the real estate news, what's happening in today's real estate market with the latest updates and special report. So let's start with the news. The news I want to inform you with to what's taking place now. And part of what's taking place is consumer confidence. Consumer confidence is through the roof. What does that mean? Well, I'll explain. What that means is that people are feeling good about the economy. They're feeling good about their own personal finances. And that means that a lot of people are going to be moving out of the house they're currently living in. Could be moving into a bigger home, maybe downsizing, maybe staying where they live now and buying that vacation home, either in the mountains or somewhere on the water. Hey, people just feel good right now, and part of the reason, as I'll explain in some of these clips, that why most of the people are feeling good after election is that they see the country moving in a positive direction. Now, here's what the news experts are reporting on. Bloomberg News says consumer confidence jumped to its highest level since 2004, extending a surge in America's optimism for their finances and the U.S. economy following Donald Trump's election victory. Hmm. The University of Michigan says that in its final index of sentiment for that year, it rose to 98.2% from the previous 93.8. Again, it jumped to its highest level since 2004. What does that tell us? Is that consumer confidence is at an all-time high. It's at a good place. People feel good about their finances. People feel good about making a move right now. Also, they're confident in where they stand. People know that they're in a better place than in previous years. Definitely better since 2004. And again, that previous quote was from the University of Michigan experts. If we go over to the National Federation of Independent Businesses, Small Business Optimism Index, that also jumped to 98.4 from a 94.9. It is the sharpest surge since 2009. And with all these increases and sentiments coming after the US election. As a matter of fact, the November's index was basically unchanged from October's reading up to the point of the election and then rose dramatically after the results of the election were known. And this was explained by the chief economist, Bill Dunkenberg. All right, both of these articles came from the Bloomberg News. I'm not making this stuff up. But what it's telling you is that consumer confidence and small business confidence are way up. On CNBC, they do all the American Economic Survey, and for the fourth quarter, found that the percentage of Americans who believe the economy will get better in the next year jumped an unprecedented 17 points to 42% compared before the election. We're looking at America moving in a more positive era regarding to the economic expectations, said Micaiah Roberts. And this is the Vice President of the Public Opinion Strategies at CNBC. All right, now last but not least, let's go back to the Bloomberg News. Let's look at the New York-based Consumer Board Index. It says consumer confidence climbed in December to the highest level since August of 2001, the highest level in 15 years on that index, as Americans were more upbeat about the outlook than at any other time in the last 13 years. This is according to the New York-based Conference Board. American households are expecting a Donald Trump administration to deliver. They're definitely more upbeat about the prospects of the economy, the labor market, and their incomes. What I'm saying to you is that we're in a time right now that people are going to be making moves. They're going to jump into their first house. They're going to put their house on the market and buy that move up or move down home. Again, maybe buy that vacation home that eventually will be their retirement home. Let's take a look at the Consumer Confidence Index right after Bush was elected. After Obama was elected and now that Trump was elected. And we can see that though there was a bump up right after Obama got elected in 2008 going into 2009, there was nothing near the bump that we just experienced. People were excited about the potential of moving forward. The last pending home sales report actually went down, and people were talking about the fact that, well, it's because the economy is doing better. Interest rates went up, which is, we'll talk about in a second. Ladies and gentlemen, let me give you proof positive that the challenge with the pending home sales report is inventory. 90% of the challenge is always inventory. Here's a graph showing by region exactly what took place in the pending home sales report. NAR, which is the National Association of Realtors, was right. Overall, pending home sales report was a little bit less than 1/2 of 1%, down to where it was last year. But take a look at the Northeast. That was up 5.7%, dramatically different than the rest of the country. Why is that? Because housing supply in the Northeast is still good. Interest rates went up in the Northeast. All economic ramification of whatever took place over the last 90 days happened in the Northeast. Yet the Northeast sales were up 5.7%. That's because they still had houses to sell. If you look at the housing supply, we can see that housing supply this past month was more than 9% below it was last year. More than 9% below. That's a challenge. If we look at housing inventory per category, we can see that in every category, including premium homes that were not, were last year. So whether it be a starter home, whether it be a trade up home, or whether it be a premium home, we're down across the board. If we take a look at what percentage we were down in each of one of those categories, it's pretty significant. According to this report by Trulia, it was 9.3% last year. Now it's 9.1. Almost the same thing. But if we look at starter homes, we're down over 12%. Trade up homes were down over 12%, and even premium homes were down more than 5%. The biggest challenge we're having going into 2017 is that we're going to have a whole bunch of people that want to buy a home, and we're not going to have a whole bunch of homes to sell them. It's crucial that the new administration provides some type of tax relief for new construction or remodeling or something. Unless we fix the housing inventory, we're not going to be able to take full advantage of the market that we're in right now. And because of supply and demand theory, I believe interest rates will continue to rise to slow this momentum down. Now, some people will talk about interest rates, and that's definitely the case. Interest rates skyrocketed. With all that consumer confidence, there were more people feeling good about the overall economy. When people are feeling good about the overall economy, what winds up taking place is that interest rates started to slide up. There was no need to keep them down as a stimulus, and we can see that over the last 2 months. They've skyrocketed. Now, where will interest rates be going through the rest of the year? That's hard to say. The market leaders, these are the guys we usually go to for projections, are concerned. These market experts, Fannie Mae, Freddie Mac, and the Mortgage Bankers Association, and the National Association of Realtors, have delayed putting out their report of where interest rates are going to be this time next year. That report's not out yet. That's why you see those question marks. The reason they've delayed the report, they're trying to figure it out. As soon as the projections come in, I'll finish that table and get it out to you. But what's important here is the reason I can't give it to you completed now is that the experts are scratching their heads saying, where should interest rates be going by the end of the year? The experts really don't know. But I know it's important to investors because they depend on the projections to forecast and hedge their investments. So I did the best I could to give you this slide. I wish I had the crystal ball, but I don't. What I do want you to understand, not where the major organizations think the interest rates are going, but what is being said by some of the major players in the market. HSH.com, which is a website that follows interest rates, says we think that conforming 30-year fixed rates probably make it into the 4.625 or 4.7 range at some point during the 2017 peak. So right now we're at a 4.32, and HSH is saying that we can go up to 4.75. Zillow's chief economist agreed, quoting that I wouldn't be surprised if the 30-year fixed rate hits 4.75. And Mark Fleming, the chief economist at First American, says, I see mortgage rates getting much closer to 5% at the end of the year. And he said that right before 2017 even started. Jonathan Smoke, chief economist at Realtor.com, says our forecast is saying that we expect rates to hit 4.5, and by the time next year, we expect a 30-year fixed rate likely to be 5%. Lawrence Young, NAR's chief economist, is projecting interest rates that are going to be somewhere between 4.5% and 5%. So let's just settle in the middle and say somewhere around 4.75. As a matter of fact, Freddie Mac just put out this that despite the recent jump in mortgage rates since the election, the annual average for a 30-year fixed mortgage rate was 3.65 in 2016, the lowest annual average ever recorded by Freddie Mac, going back to 1971 when they started recording this. So yes, as of 2017, some of you are going to be paying a higher interest rate than the lowest interest rate ever recording in the history of recording for Freddie Mac. But you have to understand that that's coming back off the bottom. Here's a quote from MarketWatch.com. Mortgage rates would have to be a lot higher before they really crimp a buyer's ability to afford a home. As Trulia's chief economist Ralph McLaughlin estimates between 7% and 10% for many metros. So what MarketWatch is saying is they're agreeing with Trulia that if interest rates go up to 7 to 10%, it's still going to be cheaper to buy a house than it is to rent a house in many metros. So don't get carried away if they go from 4 to 4.75 to even 5%. Realtor Magazine. Mortgage rates moved higher again this week. Borrowers should still appreciate how low they are because they're likely to increase further and further, which is what I've already talked about. Listen, this is not the time for you to jump back on the fence and say, hey, wait a second, interest rates just went up. This is the time for you to get off the fence and say, wait a second, interest rates are going up. And remember what the alternative is. Yes, renting. If you rent, that rent will always go up. Let's look at this rent chart. I love this chart. This chart says it all. No need to explain it. A rising chart. Rents will continue to increase over time. As a matter of fact, Zillow just reported that renters just paid an accumulated $478.5 billion. That's billion with a B in 2016, a 3.8 increase from 2015. That's $478.5 billion was paid in rent last year. Landlords are getting rich. Listen, attention. All potential first-time homebuyers need to realize that landlords are getting rich. To all investors, there's a lot of free money out there. So it depends on what side of the coin you're on. Now, One caution we want to mention is that an increase in interest rate could lock some inventory. Let me explain what that means. It's known as interest rate lock. And as Lawrence Young said, some would be sellers might be reluctant to move up or trade down, especially if they refinanced in recent years. What does that mean? Well, if they refinance and have a 3.5% mortgage, and all of a sudden mortgage rates are at 5% by the end of this year, they're not only going to pay more money if they're doing a move up, they're also going to pay a higher interest rate. And those two things together might make them say, you know what, let's just stay where we are. So it's crucially important to understand that while interest rates are still low, if you're thinking about selling this year, make sure that you're putting your house on the market now if you want to sell this year, because later on this year, you'll also, as a move up buyer or a move down buyer, are going to pay a higher interest rate on the house you're purchasing. Market Watch addressed this issue, but higher mortgage rates have a secondary effect as well. Consider the homeowner who bought their homes in the past few years or have enjoyed refinance rate hovering closer to 3%. Unless a move is absolutely necessary, those owners are likely to balk at having to sell their house and then borrow at higher rates for a new one. Interest rate lock matters, says Mark Zandi, chief economist for Moody's Analytics. In his report, Zandi went on to say he cautioned that he doesn't think rate lock kicks in until rates are well over 5%. However, he calculates that a 1% increase in rates will increase the tenure of a typical American homeowner by just over 6 months. Also, not helpful in a market starved for activity. Bob Walters, Quicken Loans chief economist, says home loans pushed higher through 2016, largely driven by a lack of supply in the hottest markets. It's yet to be seen if these increases will continue or wane as home building grows, boosting inventory. As of CoreLogic's latest report, prices were up 6.7%. The map has it broken down by state for you. And when you take a look at a month over month price percentage change, we can see that prices are continuing in the vast majority of the country to escalate. And the reason I want you to know that is because that means people have more equity. And the more equity, which equals money, in their home is something they should be able to do something with. Fannie Mae, reporting on a recent Urban Institute study, said it this way. For most adults near traditional retirement age, a home is their most valuable asset, dwarfing retirement accounts or the financial assets and other non-financial assets. Although relatively few retirees tap into the home equity, having it provides financial security. In fact, many retirement security experts argue that the conventional three-legged stool of retirement resources, Social Security, pensions, and savings, is incomplete because it ignores the home. So what they're saying there is there's equity in a house. That equity homeowner should use. They can use that equity to move down to where they currently are living, where they might still have family, or finishing up the last couple of years on the job, and take that additional equity and buy that vacation home. That'll eventually be their retirement home, as they have always talked about. The president and CEO of CoreLogic said, price appreciation is the main ingredient for home equity wealth creation, and home prices rose 5.8% according to the CoreLogic Price Index. Paying down of principal is the second key component of equity building. Many homeowners have refinanced into short-term loans, and by doing so, they have significantly fewer mortgage payments and are able to build equity wealth faster. So what does that mean? And prices are up, and that's good news. And that what does that mean? It means a lot of people did some refinancing, some to a 15-year loan. That means they're building more equity every single month. And that equity is important. And for what reason? That means that they can basically go ahead and sell their home for some profit, make good financial decisions. They can also make the move that they had planned to make in retirement. And now is a better time than wait until later. This next slide, if we look at the percentages of home with positive equity by state, we can see that 93.7% of all the homes in this country with a mortgage on it. And remember, that doesn't include the 1/3 that don't have a mortgage on it. So we're talking about the other close to 70% of the population. 93.7% of the other 70% have positive equity now. Most homeowners think that once you have greater than 20% equity, for them, they think I can make the move. They also think I have enough cash in this house now to buy the house we've always dreamt of, or even thinking that I have equity in this house to make the move we've always wanted to. You have to know about the equity, and most people don't. Right now, that number stands at 79.1% of the homes in this country have over 20% equity in their home. And remember, 30% don't even have a mortgage. They have 100% equity. But of the other close to 70% of the homeowners, those homes with more than 20% are over 79%. So according to the last report on this, only 37% of your neighbors think that they have more than 20% equity. So even though almost 8 of 10 have enough equity to make the move, less than 4 out of 10 realize that. And this is where my job comes in. I want to make sure and let people know that there's enough equity in their home that if they ever dreamt about moving into, instead of living on the corner from the water, actually moving to the water, or instead of, staying in that 4-bedroom home that they raised their kids in, and now that they have moved out, they can downsize it and use that additional equity to either invest into the stock market or buy another piece of real estate, maybe that they will use later on in their retirement life. Folks, I'm here to tell you the truth, regardless of how much it hurts, and you will thank me later. A lot of realtors talk about being trusted advisors, but they really don't educate you on the market, its present conditions, and basically its future predictions, which is important to know. Many agents just listen to you and are paper pushers. They fill in the blanks and present the contract with no negotiations. That's not what I'm about. I represent a stronger force. I'm here to educate and inform you. There's always time to fill out the paperwork. I believe that being a trusted advisor is all about not just taking orders. It's about believing that if a homeowner decides to sell the house, you give them the best counsel you can and explain to them on why now is maybe the best time to do that. The internet has leveled the playing field when it comes to sellers' anticipation of what their home is worth and basically what appraisers value their home at. This next slide shows you that prices are getting in order too. The HPPI compares the previous gap between the homeowner and the appraiser's opinion of the home's value. And it's provided in an intriguing look at the psychographics of our market. The most recent index indicates homeowners and appraisers are closer to agreeing at the end of 2016 on a price than they were at the start of the year. It's our hope that with this information, the only surprises this holiday season are the ones wrapped under the tree. Now, obviously, Bob Walters said this last month because that's when the report was done. At the end of last month, that's basically December's report. But what I can see by taking a look at it is he's right. This is the best it's been since the beginning of the year. What people believe their house is worth and what they're getting appraised for are much closer now. So most realtors really don't have to worry about pricing too much. Buyers and sellers have a better understanding of the right price. Most sellers have the price in their head, and there's plenty of buyers out there. Here in Southwest Florida at Charlotte County Properties, we believe strongly on negotiating the best deal for your client. And we do this by continuing to make sure we're educating our customers, helping buyers make the right move, and by assisting sellers in getting their home listed, marketed, and sold. Okay, well, let's just recap. What I like to do is quickly go through these updates. First, let's talk about sales. The average days on the market was 43 days. This chart shows the results, and it's broken down by state. This one here is showing you existing home sales on a graph going all the way back to 2012. And as you can see, we're setting new highs since the end of the first quarter of 2013. The existing home sales report reported by NAR, the National Association of Realtors, have broken this down to year over year by region. For the last month, all are up in double digits. Freddie Mac's analysis shows you existing home sales in the thousands, 2015 versus 16. Here we show you new home sales in the thousands done by the U.S. Census on new home sales, breaking down new home sales and percentage of sales by price. And what we're seeing is more and more builders are starting to build that first-time home buyer home, more than just luxury homes. Let's take a look at how fast they're selling. This chart shows new home sales are selling fast. It's less than 3 months from completion to sold. And that's including a standard 30-45 day close for a typical financed home purchase. That's amazing. What this is telling me is that new construction can't build them fast enough. Let's examine it a little further and look at total home sales in the thousands. If we put new home sales and existing home sales together, we can see that 2016 was a phenomenal year for us. 11 out of the 12 months showed an increase, and I think 2017 should be a better year. Now, when we look at pending home sales, remember that medium blue is 2015, as it shows 2016 is a little darker blue at the top. We're a little bit ahead of where we were last year, then fell a little behind, and now we're a little bit ahead again. This last month, we kind of broke even compared to last year. But that's not because there's not a demand out there. I think that's because we have a lack of inventory to sell across the U.S. From what I'm reading, we need to increase our supply, our inventory of homes. Definitely don't have enough to sell. We need to keep the market moving in the right direction. Here's the pending home sales report going all the way back to 2012. And as you can see, the market has bounced back. Let's not forget the bank-owned REOs. When we look at this chart at the distressed property, which is typically the REOs, the bank-owned, the good news is that even though the percentage of distressed property has ticked up a bit this past month from 5 to 6%, it's still way below where it was this time last year. It looks like it's a 50% drop. So, okay, let's look at home prices. As far as home prices are concerned, this slide will show you the existing home prices year over year so that we can see that they're increasing in every region. This graph by NAR shows percentage change in sales from last year based on price range, and the only reason the 0 to 100 is down and it has a red bar there is because there's just not a lot of listings there. But in each other categories, prices are up, sales are up, and that's existing home sales. The S&P Case-Shiller report graph is showing a year-over-year price change. And while the land rushes of 2012 is over, we are still showing over 5% increase. Okay, where are they going? Do you have the crystal ball? I wish I did. But I can show you a forecasted chart done by CoreLogic Research showing you a forecasted year-over-year percentage change in price This is CoreLogic's projections of where they believe prices are going to be a year from now. They've broken it down by state here in this slide. The housing market will continue to rise as consumer confidence increases. As far as the housing inventory is concerned, we will look at this seller traffic chart. And as you can see, the good news is that there are more and more states reporting that there are more sellers listing their homes for sale. Blue states on the map are showing an increase in listings. As you can see, most of it is gray, going back to the lack of inventory I've been talking to you about. But again, they are reporting an uptick in the seller traffic, people asking and having their homes listed for sale. Here we see a graph demonstrating home sales in the months of inventory going back to 2011. Clearly, you can see the decline of available homes for sale today compared to several years ago. Focusing on the last 2 years, we can see that our inventory of homes for sale has dwindled down to as low as 4 months. Here we show the graph in the last 12 months. And going back to 2013, we can see year-over-year inventory levels of home sales. Now, housing supply in the last 12 months, and the reason for this is that buyer demand is strong. Everyone wants the American dream of home ownership. And right now, we have a lack of inventory, which is, of course, homes for sale. If we break down that category and focus on just new home inventory and compare 2015 to 2016, we can see that our monthly supply of new homes is around 5 months. Focusing on just the last 12 months, we can see that demand is getting stronger due to the low levels of inventory. In my opinion, basically, we can't keep up with the growing demand for housing. And in speaking with housing, buyer demand is strong right now. NAR released this chart showing buyer traffic broken down by state. Look and see how strong the demand is in your state. But going back a few years, we can see that foot traffic was higher then and now is decreasing as the market confidence in the country is getting stronger. Let me explain that foot traffic is an indicator of future sales. So what does that mean? Here is the foot traffic in the last 12 months. The reason foot traffic is down is not because there's less people going out and looking at homes. It's because we have a lack of inventory. Remember, foot traffic is an indicator of how many houses people actually go and see. Buyers don't have many or any houses to go see in some markets. That's why the numbers are down. Let's talk about interest rates. Here is a graph showing you interest rates for the 30-year fixed mortgage since the beginning of last year when it was down to 3.97. Now, another big concern we need to remember is where are those mortgage rates going? Right now, projections are a big question mark. I expect that rates should settle out a bit by the time I do the next report so that I can give you a better answer. I do know that mortgage credit availability just spiked. It's a little easier to get a mortgage than it was this time last month. And we can see that it's been spiking up going back to April of 2013. Then it took a little bit of a dip in January 14 and then straight up. Doesn't mean we're back to 2006 by all means. Now I want you to see the historic data for the mortgage credit availability index. So you can see that though the numbers are getting better, that line all the way to the right is going in the right direction, which is up. We're nowhere near where we were in 2005 and 2006. Looking at the average days to close on a loan, the last 12 months spiked up a bit, especially that'll happen during the holidays. Still averaging that timeline. FICO scores, for the first time in a while, they seem to be going down. We have 6-7 month stretch where they were going up. Now they seem to be settling back down. Again, as the banks become more confident about the economy and everything, I feel that number should continue to go down. Now, I don't want you to forget that 54.9% of all the people that were granted a mortgage had less than a 750 FICO score. So don't count yourself out. If you're thinking about buying a home, speak to a lender and see what your options are. For you buyers and sellers that are thinking of moving up or down and think they need 800 or more of a FICO score to get a mortgage right now, well, that's not the case. Check out this chart. It's showing that the average FICO score for a closed purchase loan is, and broken down by the type of loan, is for conventional 753 score, FHA 686 score, and VA loans 709. That's not bad in today's market. And here's a graph showing the average back end DTI, which is your debt to income ratio, and that was under 40%. So if you're thinking about making any moves, you need to get answers and some solid advice. I highly suggest you speak to an expert in the field, get their opinion, seek out any advice, then gather all your intel, lay it all out in front of you, and see what your options are. That way you can make the best decision for yourself and your family. Okay, continuing on here. Here's a quote from smartasset.com just this past month. Had an article about housing, and this is what they said. People are helping people better understand their money. Whether you're preparing to purchase a new home or sell an old house in the new year, it's important to know how housing trends could affect you. Keeping your finger on the pulse of the market can help you avoid being left out in the cold by rising interest rates or a widening gap between supply and demand. And that wasn't Realtor.com saying that. That wasn't Zillow. That wasn't Trulia. It was SmartAsset.com. This is a website that I and other experts depend on to get good financial advice from. What they're saying is the consumer really needs to know whether they are buying or selling. Consumer needs to know exactly what's happening in today's market. And that's what I'm trying to do here. Give you sound advice backed by the market data. If you're buying a home this year, I want to share with you 5 reasons why home ownership is a good financial investment. Number one, mortgage payments can be fixed. While rents go up, your payment stays the same. Equity in your home can be a financial resource later on as you build equity. Number three, you can build wealth without paying capital gains. Number four, a mortgage can act as a forced savings account. And number five, overall, homeowners can enjoy greater wealth growth than most renters. Ralph McLaughlin, Trulia's chief economist, recently said, owning a home is one of the most common ways households build long term wealth, as it acts as a forced savings account. Instead of paying a landlord, you can pay yourself in the long run through paying down a mortgage on a house. If you buy a house, you relatively cap your expenses. Taxes are going to go up a bit, insurance is going to go up a bit, but in the mainstay of your household expenses will remain constant when you buy a house. If you rent, the only thing you're guaranteed is that rent is going to go through the roof. This graph tells it all. You don't have to be a rocket scientist to figure this one out. Now, for homeowners trying to sell their homes on their own, if you're going to do for sale by owners, first let me help you by giving you 5 reasons you should hire a real estate professional. Number one, realtors help with all the correct disclosures and necessary paperwork in today's heavily regulated environment. Realtors are well educated and experienced with the entire sale process. It's routine. Realtors act as a buffer in negotiations with all parties throughout the entire transaction. Number four, realtors help their clients understand today's real estate values and when setting a price on a listed property and or when offering to purchase. Number five, realtors can simply and effectively explain today's real estate headlines and decipher what they mean to you. This chart by NAR, the National Association of Realtors, shows a typical sold price of a for sale by owner versus using an agent. The graph clearly demonstrates the need for the assistance of a realtor. As for me here locally in Southwest Florida, it's the same. The Florida market is on fire, and we definitely don't have enough inventory of homes to match the buyers' demands searching for housing here in the Sunshine State. I need to ask you, do you know anybody in Florida interested in selling? Please contact me. We have buyers looking to buy in all neighborhoods and in all price ranges. Florida doesn't have enough existing inventory for our buyer demand right now, and new construction can't keep up with the pace. So have your friends contact me. I'm positive we can have their home sold within 90 days. But okay, moving on. Getting back to for sale by owners. Let me explain. There is a difference between what you're going to get for your house if you sell with an agent versus selling without an agent. Plain and simple, statistics prove it. Homeowners have to understand that it's getting more difficult for sale by owners to sell their homes. The internet has made it so convenient for the home buyer to search for properties online before leaving the house and driving around. Next, that potential home buyer seeks the advice of a licensed realtor to assist them with deciphering all the information that they've attained from the internet, applying them. And finally, their realtor will help them narrow their choices from a list of homes matching their criteria, usually taken from the local MLS. Again, making it difficult for sale by owners' homes to be seen. And then later, that buyer's agent will complete the coordination needed to close on the home, scheduling home inspections, termite inspections, septic inspections if they're needed, making sure the surveys are done, delinquent taxes are paid, uh, and personally, of course, visit the home, inspect it, pin out any defects that the property may have, reassuring the client that they're making the right decision. A good realtor will always tell you if you need to walk away from a deal. Here's a slide from NAR showing the number of people who, for sale by owner their home, dropped to less than half since 1991, standing at 8%, and that's the lowest number of being for sale by owner since 1981. That's important for you to understand that for sale by trying to sell your house for sale by owner is not your best option. Studies have shown that people don't understand exactly how much equity they have in their home and feel that that's kind of my job to tell them. You see, I feel it's my job to educate the consumer, make it understandable, in hopes of taking away the fear of buying and or selling uh, your property, one of your biggest assets, which is your home. My mission is to make sure every family is confident when they're buying or selling a home. That is what I feel my job is. That's what I take pride in. There's a lot of craziness happening out there in the market right now. People are feeling good, but there's also a lot of concern. I want to make sure I live up to your expectation, not just be any realtor, but your actual trusted advisor, a person you can depend on, the person you can trust more than any other person in the marketplace to help you make that right decision. I feel it's my job to give you the greatest advice possible in the housing market, not just to sell you a home. People believe in home ownership as the American dream, and I, as a professional realtor, take pride on that mission of providing the best, most updated information available to my client to make sure that they have all the information to make that solid decision, whether they're buying or selling a home. Let's help as many families as possible we can this year to achieve that American dream of home ownership. Okay, I'm wrapping this up. I would like to thank everyone who's made my life very wonderful, and this will conclude my January 2017 monthly report on the market news. Thanks for listening. Hope you'll be back to hear more about the latest real estate trends on today's real estate news with Leo Albanes. Okay, guys, see you around. Have a prosperous day.